and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, we're going to talk about rich people mindset. So I will start by giving an update to my portfolio, and then I will share some news which are 45 years old about the mentality when it comes to investing. So let's start with a quick portfolio update. The first thing we immediately notice is that there was a red circle for this week's episode. If we go to the portfolio values tab, you can see that the portfolio is down almost $8,000 within a single week. And at the same time, you can see that the costs have stayed unchanged, meaning that I have not done any new investments. So if we look to my portfolio, then we can see that I'm actually down close to $16,000 since it peaked back in week 21. So why am I not sad when I'm seeing this, since I received messages from some of my viewers who are feeling highly discouraged to continue investing when you're seeing these kinds of big negative swings? Well, the first reason for me is that I'm focusing on building a passive stream of income through dividends, and I understand that I'm only holding individual stocks and there's no bonds in my portfolio, so the value of my portfolio will fluctuate a lot. And speaking of dividends, if we then continue to my favorites tab, namely the dividends tab, then we can see that I have received a little more than $140 in dividends this week. They came from Agree Realty Corporation, Beatrice, and Organon. Another way of viewing this, that I'm staying true to my strategy, would be to see that for the first time ever, I have now crossed the $1,400 mark within a single quarter in dividends. So if we go to my goals tab, I can now cross off goal number 36 on my list. So it's very clear to me that I'm staying true to my strategy and that I am on the right path. So you may ask, how can I feel so convinced that I am on the right track with my investing here, since you have only received a little more than $140 in dividend, but your portfolio is down close to $8,000 within this week? Well, my main reason for continuing to believe in my strategy is that it has been proven to work for other people. And of course, there's only one person to mention here, and that is Warren Buffett. So let's go and take a closer look at what he wrote back in 1977. So if we go to Berkshire Hathaway's webpage, Warren Buffett letters to shareholders, and then click on 1977, then if we scroll all the way down here, then we will find this paragraph. We select our marketable equity securities in much the same way we would evaluate a business for acquisition in its entirety. We want the business to be one that we can understand, 2, with a favorable long-term prospects, 3, operated by honest and competent people, 4, available at a very attractive price. We ordinarily make no attempt to buy equities for anticipated favorable stock price behavior in the short term. In fact, if the business experience continues to satisfy us, we welcome lower market prices of stocks we own as an opportunity to acquire even more of a good thing at a better price. So let's try to interpret these words through my portfolio. So if we look at Citigroup, you can see that I'm down close to 30%. The reason why I'm choosing Citigroup is that I initially paid close to $66 per share, and in Q1 of 2022, Berkshire Hathaway took a stake in Citigroup. Of course, they paid less than I did, since they are much better investors than I am. But nonetheless, I'm trying to learn from them. So, since I cannot predict when the market has bottomed or when it has peaked, well, if I believe in my analysis, then I should welcome these lower share prices, since that means that I will get more for the money that I invest today. And since I am a long-term investor, this is a classical example of where you can transfer wealth from the impatient to the patient. And just to be crystal clear here, I am not saying that Citigroup cannot fall an additional 10, 20, 30 or even 50% from the levels which we are currently seeing today. I'm only saying that since I have been willing to pay $66, well, then I should definitely also be willing to pay $47 if I don't believe that the underlying fundamentals has drastically changed. So instead of me being discouraged by seeing the market dropping significantly, I really try to remind myself of these 4 principles. 1, that I invest in businesses that I understand. 2, with favorable long-term prospects, operated by honest and competent people, and available at very attractive prices. And you can of course make fun of me saying that I paid way too much for Citigroup, since I can now buy them at a much cheaper price, close to 30% lower. And there I would simply have to say, sure, you are absolutely right, but in my defense, I would have no knowledge about what the stocks are doing in the short term. So hopefully it's now more clear to you why I'm not losing faith or why I'm not discouraged when I'm looking over my portfolio. And I know that a lot of people have completely different mentality, so perhaps I should end this episode by telling a story about rich people mindset. So the story goes like this. A man walks into a bank in New York and asks for the loan officer. The man says he's going to Europe on a business for 2 weeks and needs to borrow $5,000. The loan officer says the bank will need some kind of security for such a loan, so the man hands over the keys and document of a new Bentley Continental, which has a worth of $250,000. The car is parked on the street right outside in front of the bank. Everything checks out, and the bank agrees to accept the car as collateral for the loan. An employee drives the Bentley into the bank's underground garage and parks it there. 2 weeks later, the man returns and repays the $5,000 plus the interest, which is $15.41. The loan officer says, "We are very happy to have had your business, and this transaction has worked out very nicely. But we are a little puzzled. While you were away, we checked you out and found that you are a very rich man. You have a good-sized house in the upstate New York and a sizable equity portfolio and no debt at all. We are curious as to why you would bother to borrow $5,000. The man replies, "Where else in New York City can I park my car for 2 weeks for just $15? So the point of this story should be pretty straightforward. Rich people mindset means that you are constantly searching for good deals. Unfortunately, this is just a good story. It is not true. I will leave a link in the description below to an article where you can read a lot of different variations of this story when it was originally out back in 2002. So that actually sums it up for yet another exciting week of the Lazy Money Game. So hopefully you now feel more encouraged to stay true to your investment strategy. And if you have made it all the way to the end of the video and have enjoyed the content, I really hope that you would consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!